With warships moved into position off Syria, it did not take long for sectors in the market to get nervous. Our cover story looks at the Syria Spike, affecting oil and transportation in a big way. 4 U.S. destroyers have moved into position off Syria. Defense Secretary Chuck Hagel telling reporters, "We have moved assets in place to be able to fulfill whatever option the president wishes to take." All the warships off the Syrian coast are based out of Norfolk, Virginia, each with ballistic missile capability. White House Press Secretary Jay Carney says there must be a response. But reportedly, the White House is not mulling regime change in Syria or putting boots on the ground.
Chemical weapons were used in Syria.
The situation has led oil prices to spike.
It's because all of the biggest oil consumers and producers have a stake in what happens in Syria.
AAA says the rally in the futures market may be a threat to prices at the pump over the Labor Day holiday. It's also renewed the call for alternative energy sources.
Anytime there's any kind of hiccup in the Middle East or major event, we see oil prices go up because of the uncertainty.
And as oil topped $109 a barrel, its highest point in 18 months, transportation stocks such as FedEx, UPS, and a dozen other air freight companies closed down.
When jet fuel spikes like this, rehedges and rolls cost these airlines a lot of money and cause them to have a lot more trouble predicting what their overall fuel cost is going to be. And that's why you're seeing some weakness in those stocks.
Unrest in the region is having repercussions elsewhere. Scandinavian tour operators say they've canceled 60,000 trips to Egypt through next spring due to unrest. It's a $10 billion industry that employs 1 out of 8 Egyptians.